Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, November the 13th. I want to take just a brief minute to discuss what markets did last week, as the S&P 500 was the laggard on the week, and we'll discuss why in just a minute, with it down 1.63% on the week. The mid-cap index was only down 10 basis points, or 0.1% on the week, and the winner was the S&P 600, up 20 basis points, or 0.2%. And what you started to see last week, and why the S&P was the laggard on the week, is you started to see a rotation out of the mega cap AI related tech names into more value or cyclically oriented names, and you started to see more follow through that this week, and you was very telling when you saw yesterday the Dow Jones Industrial for the first time ever hit 48,000, a record high, pulling back a little bit today on Disney's earnings, but what is happening is, now that we have a government shutdown, we have over 85% of the Fortune 500 companies of the S&P 500 have reported earnings, and most are beating, as we've talked about. Over 80% are beating, and we've talked about that. And so we talked about a couple weeks ago the earnings growth, as well as it's continuing to grow, well, not as rapidly, but continued positive growth, which is astounding considering the baseline that we do have. However, what investors are looking at is they're saying, well, these other sectors that have lagged behind significantly year to date, well, those have positive earnings growth too, and they're trading at much lower multiples compared to a lot of these high-flying tech names. So, for example, on a day like today, on the 13th at about 12:50 p.m., the S&P 500 is down roughly 1% on the day as we're speaking. However, on the inverse of that, healthcare, which has lagged behind significantly year to date as a sector, is up almost 1% on the day. Investors are leaving tech and they're moving into the more cyclically oriented stocks, believing that the macro environment is going to hold up, believing things down the pipe are going to come to provide some type of relief to pricing and prices. For example, there's headlines that are breaking that maybe we get some tariff relief on some essential food items. There are things that are coming down the pipe for now that we're going to get some economic data. We'll get jobs numbers for November. We'll get inflation for November and the next month in December, and that'll give the Fed more clarity, because right now the market has priced in 50-50 odds of a Fed rate cut. Well, we would need some of these macro things to come to fruition to keep this value-oriented rally going, and if you don't have those economic triggers and follow-throughs, then you could see a rotation back into those AI tech names. So if you have questions about how to navigate this time, or what's going on, or how sustainable this rotation really truly is, we'd love the opportunity to speak to you and how to position your portfolio accordingly, as we do believe we're going to continue, regardless of which one takes the mantle moving forward. We still do believe we'll see some volatility here as we head into the end of the year. So as I said, if you have questions, we'd love to speak to you. You can reach us at 904-346-3460. As always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.